Jim Chanos was talking on Bloomberg the other day and said that what we're seeing right now in AI reminds him of a lot of ways in the dot-com bubble. Now, the numbers and the earnings are very different, but he was talking about the Ciscos and the Lucents and some of those companies that were selling the things to shore up the internet. And I think he's looking at all of the CapEx spending that's taking place and saying it's great for right now, but it could change drastically and relatively quickly too.
Yeah, I was a tech analyst during that time. I think it's very different. We have to remember the internet boom was companies like Yahoo creating web pages that were raising venture capital funds to create web pages. So the purchase of the equipment was based on like creating web pages.
Right.
AI has use cases like replacing workers. So you have true dollars for a company to measure how much they're saving. And so until we get to the point where AI doesn't save you any money, then it's a bubble, but
because
maybe it's undervalued.
There are use cases right now, and it's not just about selling to the consumer and getting people to pay you to basically give stuff to the consumer for free.
That's right, and it's almost like magic is happening, right? ChatGPT, people have remarkable experiences. Some of these people are using it as a therapist. Nobody in the early internet days was saying the web pages worked great everywhere. It was actually, people were just building web pages to nowhere.
If it's true, though, that it can actually replace worker hours or worker jobs, is there a point that you worry about what happens to the economy if people lose their jobs en masse? There was one of the AI CEOs who said he could see unemployment going from 4.2% to 20%.
Yeah, there's going to be huge distributional consequences. This is like, instead of China of the 80s, this is like another species replacing human workers, right? Robots. So I think that that's a societal question where, what do we earn wages for? Because if it's for output, this PhD worker that may be also like a 300-pound robot that could do anything is going to be a better worker than us. And so I do think it's important for us to really create a new benchmark for what is achievement and what we should be focused on. And it could have a positive outcome. We could be focused on, betterment of society.
Yeah, I guess that comes down to it. There are some people who are advocating for a 4-day work week, which is interesting.
Yeah.
But traditionally, if companies are finding ways to spend on this, they want to save the money, not just redistribute it to the workers.
That's right. There may be few. So we may have retirement age at age 39 now. But then if robots are producing food, we won't have food shortages, right?
Right.
That's what I was wondering if the AI improvements, efficiencies are helping to offset any margin pressure or profit pressures from the tariffs, because you do wonder who's paying all of this and where it's coming from if we're not seeing a spike in consumer inflation.
The reason you can't get too bearish on U.S. equities is because all the investments have a 2 to 3 year kind of return time. May 2023 was the first time NVIDIA had their big upward sales revision, right? So if these take 2 to 3 years, let's say 3 years, you're going to start seeing massive benefits in 2026. And so you want to get negative on U.S. equities, do that while you have this dream of margin expansion. And I think that dream is still, innocent until proven guilty, right? So I don't think you want to get too negative. And healthcare is probably the area where you can, most quickly benefit. You've seen stocks in like drug distribution, McKesson, Cardinal, Cencora, which are really low margin businesses, be pretty good stocks because people are dreaming margins can go from 1 to 1.5 or something.
Or is it based on some sort of reality? And what's going to be the first tell that, in fact, these efficiencies that we've discussed are actually coming to the fore?
So we read in every word from every earnings call transcript with natural language processing. We look for any signs of it. Cencora, which is the old AmerisourceBergen, for those who have, it mentioned two quarters ago on their call, they made a comment about AI efficiencies. Walmart showed a little bit, maybe 3-4 quarters ago. So you're just looking for any verbiage around, hey, you know what? We can grow without hiring at the rate we used to. Or I can start dreaming I grow 3% per year without any net hiring at all. Quest Diagnostics, there's companies that are talking about that. I mean, it's like, I don't know what it's like in the UK, but when you go to a hospital or a doctor in New York, half of them still hand you a clipboard and you're circling stuff and you're just like, come on, guys, like scan my retina, know my life, and let's move on, right? So there's just so much potential for improvement. So it's the classic is bad, or is bad like good because it's opportunity for improvement? And I'm starting to lean more in the opportunity for improvement camp, just in terms of tech and healthcare, driving efficiency. So I like both those, and they're not correlated, which is another thing that's good. Everyone I'm talking to is just looking for non-AI trades to balance the portfolio, because everyone's just loaded in the AI trade companies.
What about this, though? Insiders at NVIDIA, according to the FT, have dumped more than $1 billion in stock over the last year. About $500 million worth of sales occurred over the last month.
I don't blame them. I would take some money off the table. Keep in mind, these people are, and when I worked at Lehman, I told everybody that worked for me to, long before I left there in 2002, sell whatever you can as you vest, because you're leveraged, double leveraged. You're working there, so your income, daily income, is dependent upon it. So why have everything in one basket? So to me, it's prudent management of their personal finances.
Can you make the statement from insider to the average Joe who loves NVIDIA and bought the stock and sitting in a nice gain?
No, they're in a different position. I mean, if they have very nice gains, sure, I think you should bank some of it, particularly if you have capital gains out of longer-term capital gains. But remember, we had the same conversation not that long ago when Bezos sold some Amazon and when Zuckerberg sold some Meta. I mean, they just sell, and that's what it should be. Now, it would alarm me if Jensen Huang found somebody to buy most of his position, right? But that's not going to happen. So that to me, it's a nice headline, but it means nothing.
So to answer your question surrounding technology, what's interesting is that a lot of momentum funds, mine included, were really carrying an underweight towards the semiconductor industry coming into this quarter. Now, we have the flexibility in rebalancing on a quarterly basis, and I'm very satisfied with how we've done so far, even being underweight semiconductors. But now you have the participation. Semiconductors right now are exhibiting very strong performance, and I would imagine that you're going to see a lot of repositioning from a lot of momentum funds into semiconductors that kind of been sitting in software. So I don't think the playbook changes very much in the second half of the year.
Folks, I got to tell you something. What's happening in the tech world is beyond remarkable. And their stocks, you'll never know, looking at the ticker, how much some of these names are up. They're huge. Here's the thing. Traditional Wall Street, those analysts will never catch it. Never catch it. They're using old school valuation metrics. They just keep missing the picture. Some of them come around later on and when these stocks have made gargantuan moves. Now, I've been watching the work for my next guest for some time, and I think he's a real deal, and I'm happy to bring him in now. Futurum Group, Research Director for Semiconductors and Emerging Tech, Ray Wang. Ray, this inference, this is what I'm intrigued by. Inference, I had Beth on last week, Kindig, talking about it. I want your definition of what it is, and let's talk about what's driving it.
Hi, Charles. Thanks for having me. Yeah, I think AI inference has been a big topic right now for a lot of investors to see. In inference, to put it simply, if you look at the training of AI models, the best analogy of this, a training process more like the student is preparing for the exam, and the inference is like the student going to taking the exam, right? So when you are taking the exam, it takes a lot of thinking process, a lot of forecasting, a lot of predicting process for the outcome or for the result, right? And think about the result as the answer you get from the chatbot through your prompts, right? So that's how inference is so important. And you can see all this thinking and predicting process is extremely compute heavy. And that's why so much compute demand goes out, we see in the market.
Yeah, so you're talking, I know demand chatbots, virtual assistants, enterprise applications, all of those things are growing. You also write about the AI hardware supply chain. And so you've got NVIDIA, Taiwan Semiconductor, and the SK Hynix. Those as a foundation, do you see the growth there? Because those are key stocks, which obviously almost everyone owns NVIDIA right now, one way or the other.
Yeah, I think especially it's very important to see companies like TSMC and SK Hynix. TSMC, as many people know, they're manufacturing almost every single advanced chips globally, and that including a lot of AI accelerators globally, right? And SK Hynix, they are producing the most important AI memory now powers all the AI accelerator, especially for the chips that go to NVIDIA, right? And the HBM from SK Hynix is the best globally. It's better than Micron. It's better than the Samsung's offerings for now.
Google is emerging as some major beneficiary. Now, I don't understand the nuance of it, but a lot of buzz about them beating NVIDIA. So I'm curious, the difference between a GPU, which is NVIDIA, and a TPU, which is Google, and they won this big thing with OpenAI. Why is that so important?
Yeah, so NVIDIA's GPU is mostly what we call general purpose GPU that you can work in different set of AI workloads, right? And for the TPU that produced by the Google, it's actually designed for the AI workload in Google, right? For example, the AI chatbots in Google we call Gemini, and a lot of most of the Gemini model is actually trained based on the TPU and some of the chips from NVIDIA, right? So it's very two different chips.
You know, I think that AI and generative AI specifically is the most transformative technology of our lifetime, which is saying a lot given that we've had the internet, we've had mobile, we've had the cloud, but I think it's going to end up being the most transformative technology of our lifetime. And if your mission is to make customers' lives easier and better every day, and if you believe that it's going to be the most transformative technology of our lifetime, you're going to invest very expansively, which is what we're doing. And you can see it everywhere. In our consumer businesses, you can look at our shopping assistant in Rufus. You can look at the next generation of our personal assistant in Alexa Plus. You can look at how it's changing how we forecast in our fulfillment network, very significant gains for us. You can look at how it impacts how you can create advertising, or even on Thursday Night Football. And you can see what we're doing on the AWS side, where whether it's custom silicon to provide better price performance, or services to make it easy to build models, or create generative AI applications, or coding applications, every single one of our businesses, we're using AI to improve the customer experience.
Now, you have a note in your April letter. AI does not have to be as expensive as it is today, and won't be in the future. Chips are the biggest culprit. Okay, when I read that, I know you're talking about NVIDIA. I know you're developing your own chips. But at the same time, can I make the case that NVIDIA actually saves money, that actually does good things for you?
Well, my comment on that letter isn't about any one company. It's just about if you actually want AI to be as expansive as we all believe it can be and should be, we have to decrease the cost, particularly of inference. And the biggest culprit in the cost today happens to be how expensive the chips have been. Right. And so we have a very deep partnership with NVIDIA. We're their lead partner in every new family of chips they launch. I expect we'll be partners for a long time. But, and we learned this lesson in the CPU space with our partnership with Intel, our customers always want better price performance. Sure. And so we've learned that we are usually going to have to be the ones that provide that better price performance. And so we have this amazing chip design team in Israel called Annapurna. They helped us build a CPU chip that we call Graviton, that we're on the 4th version of, that's 40% more price performant than the leading x86 processors. And 4 or 5 years ago, we saw the same trend happening with silicon and AI, where we set that team, a separate team in that organization, to go build our own custom silicon AI called Trainium, which we just launched the second version, which is also 30 to 40% more price performant than GPUs. And so we consider it not just an opportunity, but really our responsibility to help customers have lower costs and better price performance, not just on training, but particularly in inference, because the dirty little secret is that while a lot of this expense right now is in training, because everyone's training these models, at scale, most of the expense is in inference, because you only train periodically, and an application at scale is spitting out inferences all the time. Okay. The biggest we have more demand in our AI business today than we have supply, even though we are taking down a lot of power and spending a lot of capital expenditure on our AI. And so the biggest constraint of a few constraints really is power. And so wherever we can find high quality, affordable power that ideally, that wherever we can, it's low carbon, that's where we're going to look to build additional data center clusters. Pennsylvania is a recent one. We're really excited about that.
Indiana, you've done.
In Indiana, we've done. Mississippi, we've done. And in all those cases, it's a combination of where the power is, the quality and power, and then do we have a partner, particularly in those states, who really want the jobs and really want the data centers there.
All right, I hope you're all doing great today. We got some NVIDIA news today that I'll share in just a moment. But first, I want to quickly revisit the report from the information that dropped last Friday, saying that OpenAI will be using Google TPUs. As I mentioned on Friday, I have no idea if this story is correct or not. But even if it is correct, I don't view this as a horrible situation for NVIDIA due to multiple factors, so let me quickly share some of those. First and foremost, with NVLink Fusion, companies can now integrate accelerators from other companies with NVIDIA systems. This includes CPUs, custom ASICs, and TPUs. On Alphabet's most recent earnings call, company leadership were very excited as they spoke about having NVIDIA's latest Blackwell systems in their data centers. And just a few months ago, Sam Altman of OpenAI was publicly begging for more GPUs in 100,000 chunks as they desperately needed more capacity in order to meet insane levels of demand. And so I don't expect OpenAI to stop purchasing from NVIDIA anytime soon. Even if OpenAI uses TPUs, they will most likely continue to rely heavily on NVIDIA for the rest of the system. I've seen a lot of NVIDIA bears wake up from hibernation this weekend after the information article dropped last Friday, but it's important to understand the greater context of the situation. Even if the information article is true, I don't view this situation as a major problem for NVIDIA. NVIDIA is no longer just a chip company. They are now the dominant AI infrastructure company, innovating at every component of the system and selling holistic AI systems. They're no longer dependent on just selling chips. And that is an extremely important point to bear in mind as we hear about NVIDIA's customers developing their own chips or testing chips from other companies. Now let's cover a couple pieces of NVIDIA news. First, construction at TSMC's Arizona facility appears to be moving forward speedily, with Fab 2 ahead of schedule and civil engineers already prepping construction on Fab 3. Remember that TSMC manufactures NVIDIA's chips, and the faster they onshore production to the US, the better. We also got news about GB300 Blackwell Ultra shipments today. According to the report, GB300 should begin shipping soon, most likely in August or September. Jensen Huang told us at GTC Paris that GB300 is, quote, completely in production and is right on schedule. Blackwell Ultra should ramp very quickly, as it is essentially an upgrade of the chips within the Blackwell system and is not a complete system upgrade like Blackwell was. After Blackwell has ramped, we should see margins return to the mid 70% range late this fiscal year, as NVIDIA forecasted. I continue to be bullish on the long-term future of NVIDIA, and I genuinely think this company is going to be worth substantially more in the future than it is today. AI demand from both businesses and consumers is extremely strong right now and will almost certainly increase in the coming years. NVIDIA maintains its competitive moat across both hardware and software as they continue with their total system approach. I think NVLink Fusion actually strengthens NVIDIA's competitive moat as it increases the likelihood that customers will remain within NVIDIA's ecosystem. We have a clear data center product roadmap stretching all the way into 2028. NVIDIA continues delivering performance upgrades that are so significant that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. The world's enterprise IT is just starting to get AI, and Jensen believes this is an opportunity worth hundreds of billions of dollars. We have so many sovereign AI factories being planned in both the Middle East and Europe, with 20 sovereign AI factories being planned in Europe, along with many other AI factories being planned by European companies. Jensen believes Europe's compute capacity will 10x in just 2 years, and NVIDIA will also play a crucial role in the future of quantum computing. Jensen told us at GTC Paris that NVIDIA is working with practically everybody in the quantum industry right now on NVIDIA's CUDA-Q platform. And Jensen told us that the next generation supercomputers will have a QPU assigned, with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they are now going to do the same thing with QPUs. On top of all of this, Jensen Huang believes that the world's computing capex will reach $1 trillion annually by 2030. If he is correct, which he usually is, then NVIDIA should be worth substantially more in the coming years than it is today. For all of these reasons, I continue to be bullish on the long-term future of NVIDIA. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.